Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are a TSTW 24 traders, and our website is www.stochastic-macd.com. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW 24 traders. All right. Today is the 20th of April 2014. And the time in London is 14:02 p.m. In New York, 9:02 a.m. The title of the video is how to trade the dollar yen. Okay, how to trade the dollar yen. All right. The first thing I need to tell traders is that day traders, swing traders, are using the technical analysis, but the smart investors are using the fundamental analysis. All right. At the beginning of this year, 2014, I told traders about the level 10541 for the dollar yen, 10541. That's the high of the year 2013. This is the red horizontal line here. And I said to traders that as long as, okay, the dollar yen remains below the level of 10541, we will give priority to sell signal. If we are buying below that level, we need to be very, very careful and manage the trade. All right. So if I put a vertical line here, you see the vertical line here, that's the beginning of the year 2014. If you follow that instruction, you will be giving priority to sell signal. Okay. So now it came out of the bearish channel, and it's going now like a crab, horizontal. So okay, this is what we are looking for. So it went up, went down, went up, went down. Careful, there's another resistance, the turquoise line here. And I told traders that as long as we remain below the 10541, priority to sell signal. I refer traders back to our video that we call, okay, trading Forex on the edge, part 1 to 5, at George Trio channel, www.youtube.com/George Trio channel. Trading on the edge, okay. Trading Forex on the edge, part 1 to part 5, okay. So as long as the dollar yen stays below the level of 10541, we will give priority to sell signal. This is crucial, very important. Why? Because this is the highest point last year. For the price to be bullish, truly bullish, it must find its support above the previous high, which means converting this level, this resistance level, as a support level. Break above, retest, turn around. All right? The bullish momentum is stalling as long as the price failed to display a new high. So if we don't go above this red horizontal line, and go find support above it, we will give priority to sell signal. But there is something else I want today to pay attention to, which I'm going to add today. I'm going to go now to the yearly chart. This is how the professional trading, this is how, okay, the hedge funds are trading. Okay, trader must highlight the high and the low and the median line of the year 2013. I will not do it today. So I'll tell you already this is the high. I'll tell you also the low. The low is at 8654. Now, trader will use okay, the median line, which is okay. All right. The middle point of this range, the range of this year, that's the middle point. We can use Fibonacci retracement, join the high to the low with the Fibonacci retracement, and then draw a line on the 50%. That's the median line. Okay, that's the middle point of the range of this candle. So, though we are bearish, though we are not completely bearish, though we are giving priority to sell signal below the level of 10541. All right. We need to be aware that there is a support level at the median line of this candle here. All right. Somewhere, if I do it now very fast with Fibonacci retracement, 1 second. So I'm starting from the low, which is the low of this candle here. And I'll move my line down to the high of this candle here. And the point I'm looking for is the 50% Fibonacci retracement level, which is this orange line here, 9600. I will remove my Fibonacci retracement level. So you see now, we are trading around key level. So all I've said to trade at the beginning of the year, if you're using the market stable data, that if the price failed to display new higher high, the highest point of last year is a very, very important level. I will also refer traders back to the article that we have written called Trading Critical Price Level at www.articlebase.com, or just put in Google Trading Critical Price Level, the 6th critical price level. So, see, so the median line is 9600. So we are giving priority to sell signal until the price reaches this level of 9600. If it comes to this level 9600, we need to be careful because this is a psychological price level. We need to be careful. The price may find a support here and change direction. But I do not expect it to do that. Okay? I don't expect it to do that, but we will see. Okay? So first level, 10541 for the dollar yen. And the second level, the median line, 9600. And the low of last year, 8654. Note those key levels down so you may make excellent decisions. But right now, because we are near the high of 2013, priority to sell signal, very, very important, using the market pattern. The next thing I need to say to traders when we are trading the dollar yen, we are comparing the economy in the United States to the economy in Japan. We are also comparing the Federal Reserve decision, okay, in New York to the decisions that are made by the central bank in Japan. The policy in the United States was about quantitative easing, which is coming to the end now. So they were printing money since 2009 up to now. Now they are, okay, reversing the policy, which means soon they will start increasing the interest rate. But it's a bit tricky for the Federal Reserve in the United States to start increasing, quickly the interest rate, because a lot of people will get into trouble. The people who are paying for their house, the real estate market, will have difficulties if people have to pay higher interest rate on their loan for their house. Okay, the economy is just recovering a little bit. They may get into trouble, and we may create another real estate crisis. So they don't want to do that. So if they're going to do it, they will do it gently. But my view is that the dollar yen is now at the end of the first wave, contrary to the general belief that it's at the end of the third wave. Some traders also told me that it's at the end of the fifth wave. But to a certain degree, we may say, okay, right, because the first wave can be divided into 5 waves. What they are calling first wave, second wave, third wave, fifth wave on the weekly chart may be the internal wave of the first wave alone. In my view, according to my wave count, I'm expecting the dollar yen to pull back down at least to the level of 900, even go down more. But that remains to be seen. Why? Because it's not all about technical alone, it's not all about area wave alone, it's about the fundamental, the economy news, the decisions that are made in Japan can affect this currency pair. Decisions that are made by the central bank in New York will affect also the dollar yen. That's why I say to traders, it's very, very important that we combine the technical and the fundamental. If the music has changed, the dance must change too. All right, we want to follow the price and the price alone. That's why 10541, as long as it stays below it, we will give priority to sell signal by following the market pattern. You see, it was in a declining pattern, declining channel before. now on this weekly chart is in horizontal channel. Okay, this is very, very important. Okay, so the policy in Japan, they went into deflation. The economy was not moving anywhere, and strangely, for years, the previous Japanese government did not start doing quantitative easing like in the United States. But recently, this year and last year, they start also doing quantitative easing, which means putting money into the stock market, all right, printing the yen, devaluing the yen. Okay, that's why the dollar yen was going up. So if the yen is devalued, okay, if the Japanese government is devaluing the yen, all right, to balance their inflation rate, okay, so the worst enemy of all central banks is the inflation. So their inflation went almost below zero. They want to bring it up a bit, okay? So they start, devaluing the yen. Because if you are devaluing your money, the price of all goods will start going up big time, which means the inflation will going up, okay? So I think they were late, very late, okay, to put the economy back in line while the Federal Reserve of the United States was busy, okay, printing the dollar. They should have been doing the same thing, not to wait, okay? I don't know whether there was some consultation between the government, say, hey, you guys wait before, okay, probably the American told them, okay, you can't do it now, wait until we do ours first. We are the leaders. I don't know. Okay, so we want to watch the dollar, and we want to watch the yen, we want to watch the U.S. economy, and we want to also watch the Federal Reserve decisions. We want to check the fundamentals. So the Japanese policy now is to devalue the yen. All right. So as long as they are devaluing the yen, the dollar yen will be going up. Okay. So unless their inflation went up big time to meet their target level, then they may change their policy. But so far, that's what we're expecting. And also, the general public was expecting that the Fed will start putting the interest rate up, and the dollar yen will go up forever. But my view is that we will wait. We will see. It may be a little bit ups and down up to the year 2016. That's the year we are waiting for, the year 2016. And then we will see what's going to happen. But so far, my view is that at one point, we will prefer the dollar yen to return back to the level of 9063, even a little bit below it, before resuming the move to the upside. It is bullish, but it needs to pull back. That remains to be seen. As you can see, it stays this triangle here. See the triangle? That's the top of the triangle. That's the base of the triangle. That's the height of the triangle. There was a bullish move, plus the triangle, price breakout. So that we use the height of the triangle as the target zone. Price always going from A to B. So we move the targets here. The price hit the target, which is the red horizontal line, right here. You see? All right? Which is the high of 2013. So after it came out of the, you see the triangle? The height of the triangle, we move it after the breakaway point. Now this was a conversion point. Trader sold it again. Now it's pulling back. Now it's going horizontal. We'll see what's going to happen. Okay. Always. Okay. You see now. All right. If you want to trade the dollar yen, all right, ladies and gentlemen, there are tools that we must use. Okay. Professional use what we call, okay, the equilibrium price level. Okay, and I will give you here the short-term equilibrium price level for the dollar yen for the next 2 weeks. All right, I need to mention that for the next 2 weeks is 10270. Sometimes the short-term equilibrium price level may last more than 2 weeks, but very often it will change after 2 weeks. So the short-term equilibrium price level for the dollar yen is 10270. Traders must watch that level carefully. That's the turquoise horizontal line for the next 2 weeks or even month, okay? The long-term equilibrium price level for the dollar yen is at 193. It's here. This is the pink horizontal line. I will not say anything about the long-term equilibrium price level because it is my own proprietary tool. It's nothing to do with the TST trading system. It's my own personal trading tool. I will not say anything about it, but I will give you the long-term equilibrium price level for the dollar yen is 10093, 193. All right, that's it. So traders must pay attention to that level carefully, the pink line and the turquoise line. So the first level that we are watching is the high of 2013, 10541, the median high of last year, and the low of last year. We are giving priority to sell signal between the high of last year and the median line of last year. But apart from those key levels, we are also watching the short-term equilibrium price level, which is 10270, and the long-term equilibrium price level, 10093. I have started telling traders about the long-term equilibrium price level from this year, 2014. It's the first time I'm doing something like this, okay? If you want to buy an asset, ladies and gentlemen, this is real money, dollar, that the bank will buy and resell to the public. So, for instance, if I want to go to United States for a nice holidays in New York, in Miami, Miami will be better. All right, okay, nice weather, beautiful place. So, I will have to do my transaction in dollar, even if I don't exchange my money straight away from London into dollar. If I use my credit card, I don't use credit card, by the way. That's my personal issue. So I used credit card before, now I'm not using credit card anymore. So that's so if I'm using my debit card, okay, and I'm purchasing gold or I'm doing anything in Miami, for instance, the bank will convert first my okay, because the money in my account is in sterling pound. They will convert. You use the exchange rate between the dollar and the British pound to convert my pound into sterling pound, and I will pay with my card. Though I'm paying with my card, the transaction will happen in my bank, conversion from the sterling pound into the dollar, and then pay, okay, pay for my goods. That's how it goes, okay? And I'll pay a little bit of fee for my bank also, all right? You see now? So this the money, when we are talking about currency, we are talking about real things. We are talking about real money. We are talking about real asset, money that people spend, money that people use to pay for their debt, their loan. Government pay also their debt. Like if the Japanese had to pay the Americans, okay, some debts, okay, they have to convert the yen into, okay, the dollar to pay the American government. The same way, if an American government want to pay the Japanese, they have to convert the dollar into the yen to pay the Japanese. But there is something else that is happening in the Forex market that a lot of ordinary traders are not paying attention to. Around 8 p.m. London time, there are some transactions happening in the banking system where there are some important transactions that will take place. It's very, very important that this transaction, okay, go through at the perfect rate, at the best rate. So, for instance, if I want to pay you, suppose you are my client in the United States, okay, and I need to pay you by today, by the end of today, $1 million, okay? What will be my best wish? I would prefer that the dollar is going down in relation to the pound, which means the pound is rising in value compared to the dollar. So if the pound is rising in value compared to the dollar, I do not have to spend a lot of pounds to pay you in dollar. You understand? So if the exchange rate is favorable to me, okay, I will be quickly, when I see the pound dollar going up big time, hitting the highest level of the day, I will quickly call you and say, I want to settle my £1 million debt in dollar, okay? And I will use, okay, the exchange rate, okay, that the current exchange rate to pay you. I know that I've gained because the pound went up big time against the dollar, or the dollar went down big time against the pound. On the other hand, if American government also want to pay the Japanese in yen, they will prefer that the dollar is going up big time when they're about to pay the Japanese. The same way when the Japanese want to pay, for instance, the Europeans, they will prefer that the yen is going in value in relation to the euro, so they don't have to spend too much yen to pay the Europeans. So we are talking about real assets when we are talking about the Forex market or the dollar yen. So the bank during, before the holiday season, because this is the spring now, soon is the summer holiday, a lot of family will bring their children on holiday, and we go different places in the world. When the currency hit their fair value, now I'm telling you why it's so important to know the short-term equilibrium price level and also the long-term equilibrium price level. For instance, if you want to buy, okay, for instance, the current short-term equilibrium price level for the dollar yen, okay, which means $1 for 102 yen, okay? All right, that's the short-term equilibrium price level, okay? So that's the short-term fair value. Equilibrium price level is the fair value, okay, the short term, the intrinsic fair value of a financial instrument. So this currency pair, the short term equilibrium price level is 10270. All right. You will see very often, though the general public does not have the formula to calculate it, there are various ways traders try to calculate. The smart investor try to know the current fair value of any asset. I am the only one that know a formula to calculate. If I show you now, let's go to the daily chart. And I want to show you how the price behaves. Look at the price, how the price behaves around this turquoise line here. See, when above it, come back down. When it now you see you see how on Friday how it stopped on the edge exactly. You see here, stop on the edge of okay, the 10270. Very often, where there is a value, the price will oscillate around it before finding a direction. If the price deviates too far away from the equilibrium price level, and the equilibrium price level does not change, there's a high chance the price will pull back near the equilibrium price level. If the price pull back near the equilibrium price level and start going up again, you must buy. Okay? But you see here, it pulled back near it, but it didn't start going up, it fell. You should sell. Okay? That's it. On the other hand, if the price D below the equilibrium price level, all right, and then pull back near it, okay, so when it is stretched away from it, we consider oversold, but we don't sell anyhow, okay, I don't want to dwell on it, and it rally up to the equilibrium price level, we will look for opportunity to sell. Now you need to be careful and use the top-down trading method to sell. Now you see here, trader sold it on the edge, but it went down a little bit, but quickly went above it. Now it goes above it, we want to find a support. You find a support, it will deviate again. Here it is coming back again. Now it failed to find a support. We must sell. It went down, it deviate again, far away from it. If the price move far away from it, short-term fair value, okay? See, we are on a daily chart, it's a short-term, and it's pulling back again. Near it, we will look for opportunity to sell again. Be careful. You don't sell without receiving a valid signal. You don't sell anyhow. You use the top-down trading method. Here we have a balanced market, the price oscillating. Though there are resistance here, careful. All right? You see now how the short-term equilibrium price level, okay, is behaving. Though the reason why I'm saying this to you is that if you want to do a transaction in the dollar or in the yen, you want to know at least at the time when you are about to say buy or sell, or you want to make a big payment or settle, okay, a loan, okay, you want to settle your creditors, okay, you want to know at least if you can have that crucial information about, okay, the short-term equilibrium price level. That will be very, very useful to you to know what is the short-term equilibrium price level. Right now, the short-term equilibrium price level is 10270. That's the fair price to pay for $1, okay? If you're giving $1, you are exchanging $1 into yen, you want to get at least 102 yen 70. So if, for instance, at this stage, I go to my bank, I say, okay, what's the exchange rate between the dollar and yen? I want to convert my dollar into yen. And because I know my short-term equilibrium price level 10270, and they say to me, no, the current, they say to me, okay, George, they show, now we are exchanging, if you $1, you will get 103 yen. That's very good price for me because it's above, okay, the short-term equilibrium price level. I'll be willing to exchange my dollar for the 103, okay, yen, because I know that the short-term equilibrium price level is below $103 yen. For instance, if they say to me, okay, today, George, they want for $1 you get 105, okay, yen. Well, I will exchange a loss of my dollar for a yen because I know something that these people do not know, that the short-term equilibrium price level or the short-term fair value or the short-term intrinsic value of this asset is 102.70 for $1. $1 for 102 yen. But if somebody want to give me 105 yen for $1, I'll be willing to get into that deal for sure. The sheer importance of it for commercial traders that are buying and selling hugely, intervening in the currency market, This information is very, very important for them, and they know it. Now, the long-term equilibrium price level, as you can see here, suppose I'm bullish, all right? I'm bullish, and I want to buy, okay, the dollar, okay, buy the dollar, okay? I want to buy the dollar, okay? Because I'm a Japanese, okay? I want to buy the dollar, okay? So, if I know the long-term equilibrium price level, that for $1, I should get, okay, 100 yen 93, all right, 100 yen 93. If, for instance, okay, that's the long-term fair value for $1 for a yen, okay. If, for instance, at this point in time we were somewhere here, that's for the long term, all right. So if the dollar is here 105, okay, the dollar yen is at 105, okay, I will be happy to keep exchanging, moving my asset from the dollar into the yen. Yes or no? All right? Okay? Because I know that for the correct, the fair value for long term is $1 for 100. But now, today, if the dollar for $1, somebody is happy to give me 105 yen, I'll be busy converting my dollar into yen, because I know that the correct exchange rate is $1 for 100 yen. But if somebody's giving me at the highest price, I'll be willing to exchange my dollar for a yen. So the point I want to make here is that when we are trading currencies, all right, sometimes traders get a little bit, too excited, and they forget about what's going on, because these are real assets that the banks, the government, human beings are using to pay for their goods, their debt, and they care about how much they are exchanging them for. As we, as a day trader or swing traders, are messing around in the market, there are people sitting in the real market, okay? If you go to some country and you come to London, the foreign exchange offices in London, okay? You go to, Paddington, or you go to Oxford Circle, you go to King's Cross Station, where you want to go to the airport, you see the exchange rate offices there, and you want to exchange your dollar, or you come to London, you have some dollars in your pocket, or you go to Japan, because we are talking about the dollar yen, you go to Japan, and with your dollar in your pocket, you want to convert them into the yen, you go to the foreign exchange office, and they will tell you the exchange rate. You may not be happy about it and say, no, I don't want to exchange it. But the value, the importance of the short-term equilibrium price level and the long-term equilibrium price level is that it allows traders that want to, or market participants, or investors that want to exchange their real money into another currency, if they know the short-term and the long-term equilibrium price level, they can make excellent decisions, because the foreign exchange office may not know the short-term and the long-term equilibrium price level. Depending on what you want to achieve, you can use that information to take the best value for yourself. All right. So, if, for instance, you go to Japan right now, and you see a foreign exchange office, and you say, how much is $1 in yen? And they say to you, for $1, you get 105 yen. Now that we know that the short-term exchange rate is 102 and the long-term is 100, you will be crazy not to accept that deal straight away, because it's in fact a deviation from the true value of this dollar yen. All right. So apart from the economy news, the fundamentals, the reality of the economy in the United States and the economy in Japan, the short-term equilibrium price level and the long-term equilibrium price level will allow us to make excellent decisions. Either we are day trading, swing trading, we are traveling as a tourist, exchanging real dollar for real yen. We can use the short-term and the long-term equilibrium price level to make excellent decisions. So technically speaking, in our view, as long as the dollar yen remains below the level of 105, which is a deviation, you see now, it's a deviation, the level of 105 for 1, is a deviation from the long-term equilibrium price level at that point in time. Now, it pulled back to retest the long-term equilibrium price level. And there were buyers, you see. We on a monthly chart. It pulled back to retest the pink line, which is the long-term equilibrium price level. Now, it went back above, the short-term equilibrium price level, and now it's pulled back again to retest the pink line again. So it's hanging around between the short term and the long term equilibrium price level. Who are these people? Are they buying? Are they selling? What's going on here? But we know that something is going on here. If we go, for instance, ladies and gentlemen, to the monthly, to the 4-hour chart, okay, let's go to the 4-hour chart. We are talking about how to trade the dollar yen, all right? We want to combine the technicals and the fundamentals. I will refer traders back also to www.forexfactory.com. Traders can learn great amount of information about Forex trading, the economy news, the calendar, okay? You see here, this is Forex Factory. Excellent website, ladies and gentlemen. For Forex traders, you'll be mad not to come to this website, okay? So if you are day trading, swing trading, professionals are coming to this website all the time, okay? All the time. The time of the day, the impact, you see the red envelope, the orange envelope, these are the impact, high impact news, medium impact news, low impact news, okay, neutral impact news, they all here, the time. And if, like, for instance, you see here, so you are in United States, you don't know what's happening in Europe, so the Forex market will open tonight, which is Sunday night, so Forex. So we know that in London, okay, in Europe, in Germany, okay, in Italy, we are on holiday on Monday. But United States, they are not on holiday. So you want to know very often when the market is one country, either United States or Japan or China is on holiday or Europe is on holiday, you see that sometimes the Forex will trend the whole day. Or sometimes we may have a choppy market. Okay, especially if the American market is not open, very often the Forex can be choppy. Sometimes, if the European market is on holiday but the American market is open, we may have what we call a trending market the whole day. All right, you understand? So with the Forex Factory, we are well informed and know exactly what sort of economy is about to be released, what kind of impact it may have on the market. So for the dollar here we have, okay, you see here. On Tuesday, a very important high-impact news here, that's what I read envelope here, existing home sale. This is the forecast. This is the previous figure. You can click on the envelope here and to read more about the existing home sale. Another one here for the, Australian, the Chinese, all high impacts. You want to know when they are due and what kind of impact they may have on the market. Is any country on holiday? You want to know. And also understand the correlation between currency pairs. The leading currency pair, the number one Forex pair is the Euro USD. As I explained to traders in the video that I call How to Trade the Euro Dollar, I refer traders back to that video, How to Trade the Euro Dollar. I jot to your channel on YouTube. Okay, so you may know what we are about. I'm talking about here, talking about the leading currency pair. I will not go deeply into it. I will just refer to that video, how to trade the euro dollar. Today, our concentration is about how to trade the dollar yen. Okay. So what's happening now? So on this 4-hour chart, as you can see, I'm going to use one of the tools that I share with traders like time, the Pitchfork tool. So, the professionals are using the fundamental data, okay, which means fundamental book value, fundamental net assets, all right? They check all this carefully, okay? The real market, value of an asset, of a currency pair, they check all this. They also use what we call, the proprietary trading tool, one of them, the short-term equilibrium price level, the long-term equilibrium price level, the 6 critical price level, but they also use, the Pitchfork tool. If you want to know more about Pitchfork tool, you need to go to www.dayprotrader.com and click on Pitchfork tool trading. To use the Pitchfork tool, we need the 3 points. The first point that I'm using is this point. You see this candle here. Can you see? The top of this one, That's the first point. This is the second point here. And this is the third point here. So without 1, 2, 3, I have my Pitchfork tool. Look carefully. Look carefully. The price on this 4-hour chart for the dollar yen. Pay attention to you see how the price was touching the equilibrium price level here. Now it went above it, which is a deviation away from the short-term equilibrium price level. Quickly, market brought it back to its fair value, but it failed to find a support and crashed to it, again went too far away. Because it went too far away again on this side, it went up too far away from it on the other side. Now again, it went too far away from this side. Very often you see it, very often, unless the short-term equilibrium price level has changed. Okay, all right. If it does not change, the price goes far away from it, we just wait. Okay, very simple. As I explained to traders, the equilibrium price level is not part of the TSTW trading system. It's not. All right. Now, so here we are. So the price, after moving far away from the short-term equilibrium price level, it went boom, 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 near the short-term equilibrium price level. Attention to the turquoise line here. It's not by mistake the price behaving like this. Now the price not only stopping there, it's also hanging around the median line of the pitchfork tool. So the zone below the median line for the pitchfork tool is the bearish zone. But now, what do we need to tell traders now? Okay, so look carefully. We want to analyze the price. So we can see that there was a bullish progression. The price went up from here to here. But look, which is a bullish progression. After pulling back, there was no more demand to buy. Everybody sold it. So all these people that bought it here and sold it back down. This momentum here, bullish momentum, has been cancelled. We must now reevaluate the new move that is starting here, as we do when we are counting Elliott wave. So when the second wave has cancelled the first wave, we restart counting the wave. So now a new move has started. So we must now keep all our eye. We forget all this because it has cancelled it. So we will see if they're going to be bullish, okay, for short-term traders, day traders, swing traders. If they're going to be bullish, all right, well, the price will stay in a rising channel until it goes above, okay, and find a support above the short-term equilibrium price level, at least. Right now, the price displaying, you see, there was a low, a higher low, and here we are. So, how do we sell? Okay, if you want to sell, this was the previous high before the latest high. So we want to sell at least. If you want to sell, you want to sell below the previous high, which means break below it, okay, at least. And the price start going in a declining channel, okay? You can be patient. You can use the 4-hour chart. I show traders how to trade the 4-hour chart at www.youtube.com/George how to trade on the 4-hour chart, okay? So we can combine the 4-hour chart and a 15-minute chart using a 4-hour chart as the higher time frame and using 15-minute chart to break it down using a top-down trading method, all right? So the price now at resistance level, the median line of the pitchfork tool, and also below the short-term equilibrium price level. Doesn't mean sell anyhow. When we receive a valid sell signal, we will sell. All right? If we're going to be bullish, we will prefer to buy above, which we break above the equilibrium price level and find a support. If it's going up, so the ultimate target, it may continue to go in this channel like this until we reach the edge, the upper edge of the pitchfork tool. Boom, 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 here. As always, if you want to sell, ladies and gentlemen, sell in a declining channel, use a top-down trading method. Okay? Very important. At the resistance zone. All right? It makes sense. It's also a powerful. All right? So we want to trade the dollar yen. We want to understand what is the dollar yen. We are comparing the dollar to the yen, or we are comparing the yen to the dollar. We are also comparing the economy in the United States to the economy in Japan. Okay, decisions that are made by the central bank in Japan and decisions that are made in the United States by the Federal Reserve Bank. Very, very important for us. Okay, these decisions can change the dynamics of this market. So, for instance, if next week, okay, the new Fed in the United States starts saying, okay, we'll put the interest rate up, the dollar yen will start running fast, okay, big time, okay. On the other hand, if tonight the Japanese government came out and said that the Bank of Japan started saying to people that, okay, we're going to continue our quantitative easing, print more money, This currency pair will go up again. The economy news, the fundamental Forex factory, very important, okay, can change the dynamics of the market. The fundamentals, talking about the economy, the reality of the economy of each country. In London recently, the economy was doing well. Why? Because, why? During the credit crunch years, okay, years before, okay, the credit crunch, people were borrowing a lot of money. And the bank was also charging people unfairly what we call, okay, payment protection insurance. And but recently, a court, okay, has agreed that the bank were unreasonable to overcharge customers for this payment protection, okay, insurance. So for London, billions of pounds has been paid back to the society, to the customers, okay, by the bank because these, okay, payment protection insurance were unfair. So a lot of money has been paid into the economy, billions of pounds. So now ordinary people on the street who do not have enough money, okay, who are struggling during the credit crunch, suddenly the bank start paying loads of money to people. What can they do with it? They will go and spend it. That's what they were doing. So by spending, they are investing those money back into the economy. This is what is helping the economy of United Kingdom, Great Britain. As I told traders before, it's very, very difficult to be completely bearish against the pound because the economy in London, in Great Britain, is quite resilient, as we have okay, demonstrated that this season again, okay, how the economy is doing very well in Great Britain. Another reality trader will pay attention what is happening in the United States. They were also paying, okay, some of the house buyers. This has also helped the economy in the United States, and those who have been charged unfairly, some compensation were paid by the Bank of America. This is also happening. So when we are trading the dollar here, we want to see the reality of the economy, decisions that are made. If money is coming out of somewhere, the money will go somewhere. We want to check also, very important, this is very important for us. Every Thursday, you are trading the dollar yen, you want to know, very important, every Thursday, the unemployment claim is here, the red envelopes here for Forex Factory. This economy news will change the dynamics of the dollar yen every Thursday. They may change the day sometime, but very often, every Thursday, this economy news will be released. Another major economy that can affect the dollar yen, because I explained to traders in a video that we call how to trade the euro dollar, that crude oil is a market indicator and is positively correlated to the euro USD, which is a leading currency pair. If the euro USD is affected by the crude oil, it will also affect, okay, the dollar yen. So another economy news trader must not forget, also due on Thursday, is the natural gas storage. A lot of Forex traders do not even know about this kind of economy news, how they affect the Forex market, and every week they are losing money, not because they cannot trade, but they just don't understand how the Forex market functions and which economy news they should pay attention to. If you are trading the dollar yen, you must check the Forex factory, look for the news that they call the unemployment claims, okay, and also the natural gas storage, normally every Thursday. They may change the date, but normally every Thursday. The next economy news that you must know is about crude oil inventory, usually every Wednesday. They may change the day, but every Wednesday you want to look out. So like Sunday like this, you want to check which day are they releasing crude oil inventory, okay? So you look, and you want to know when it's due. You see here, it's on Wednesday. You see, they put in orange here, crude oil inventory. This economy news is crucial for all Forex traders, especially those who are trading, okay, the dollar yen. Do not use the technical alone. If you are trading Forex, it's capital that one is combining the technical and the fundamental, learning properly, okay, to trade the Forex market. One can go to www.stochastic.com, click on Forex trading, and also there's another page that we call Forex training. Apart from these two pages, there is another web page that you can also visit. It's called Forex Trading Education. Apart from this web page, we have also our YouTube channel, the Joe Trio channel, where we are busy, okay, sharing our trading strategy with traders that want to improve, okay, their trading result. This is about how to trade, okay, the dollar yen. Ladies and gentlemen, We are coming to the end of this video. Do not forget the short-term equilibrium price level is 10270. The long-term equilibrium price level, if I switch back again, to the monthly chart, is at 193. These levels are very important for us. We must constantly watch that level. If I go back now again to the daily chart, let's see it on the daily chart, see how the price is acknowledging the long-term equilibrium price level here. And here it is, here it is. There was a deviation from the, you see, deviation from the long-term equilibrium price level. Now, we are near it again. Watch it carefully. There are some people buying here, but as long as the price below the high of 2013, priority to sell signal in a declining channel. I hope you have learned something from this video also, and we put it into use, to make excellent decisions. If you want to know more about proprietary trading, go to www.stochasticmarket.com. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. Speak to you soon.